So this is Scott Talley coming to you from the worldwide headquarters of Network International, and we're fortunate today to have an expert extraordinaire in the mortgage business, Ms. JoAnn Cooper. JoAnn, thanks for joining us all the way from Katy, Texas today.
All the way. Thanks for having me.
Did you have to get your passport stamped on the way in down I-10?
Had to pay some tolls for sure.
For those of you that don't know, Katy's about 25 minutes west of Houston. So, JoAnn, how long have you been doing loans in Texas and the mortgage business?
Since July of 2003. So pushing 17 years now, which is...
Started when you were 4.
When I was 4.5, I'd say. I'm losing my headset. Sorry about that. 2003, that summer, I was looking to do something totally different, and I was introduced to this, and sometimes it's just the right time to hear about something, and that's what it was for me, and I've been going strong ever since.
Awesome. And we've had some changes in the mortgage industry in the last couple of years in particular. What was the big change about 2 years ago?
There's been a lot of changes. Everything from how to qualify to what kind of loan programs are out there. I don't know specifically which change you're referring to, but there's been a lot.
Yeah, I knew that the federal government had stepped in after the mortgage crisis.
Oh, yeah. That was a few years back, 2008, really.
Yeah, it's been that long already. Wow.
Yeah.
Wow, time flies.
Mm-hmm.
So in the mortgage business, there's lots of different things that go on, but we want to talk a little bit today just about a few specific items. What percent of the people come to you that are looking for a new mortgage, and maybe what percent are doing refis?
Yeah, so when you say a new mortgage, you mean like for a home purchase.
Right.
I used to answer that question by saying the majority is purchase, but more recently it's been moving more towards the refinance business. So I would say for me personally, it's probably 60% refinance to 40% purchase.
Where do the interest rates need to typically be for someone to look at a refinance for it to make sense? Or is that even the question you ask?
Not really. There's a myth out there that unless you're improving your rate by 1 or 2%, it's not even worth looking at. And that may be true if your goal is just simply to lower your monthly payment, because then obviously rate is very important. But another way to lower your payment with a refinance is changing, let's say, from a 15-year to a 30-year loan. If, let's say, you've changed jobs and your income isn't where it used to be, you can stretch that payment out and get a much lower payment, and interest rate is not really a factor. But more so than that, most of my clients end up doing what's called a debt consolidation, cash out, home equity type loan. And in those loans, interest rate is really not the main focus. There's so many other ways to leverage the money that's in your home equity. Interest rate's not really the most important thing. So...
Yeah, and typically, how much equity does someone have to have in their home for a mortgage company or a bank to look at another loan?
If you're looking to refinance in Texas, the cap is 80% of the value. So if your home is valued at $200,000, the max you can borrow is going to be $160,000. So if your current mortgage is $100,000, you've got $60,000 in equity to play with, But if it's $150,000, you don't really have enough to do anything with it.
Right. So one of the reasons I wanted to interview you today is because of the recent. I wasn't aware that people are actually using these home refinance loans as sort of a mortgage consolidation or
debt consolidation.
Debt consolidation. Mm-hmm. Yeah. Tell us about that a little bit.
Yeah, I have the majority of my clients that go for this type of loan are going to be people in my age group that are sending their kids to college, and they've saved, but they just didn't realize how much they were going to need. And the reality kind of hits them at the last minute, like, wow, I'm going to send my kid first semester, hope I can send them back again, And then you've got other people that are just drowning in debt, because that's kind of the American way.
Right,
if we want something, we're going to get it, whether we can afford it or not. And so those people find this type of loan is like hitting the reset button on their finances, because what they do is they take the equity that they've built in their home, they apply it to these other expenses or debts that they already have, and they free up, in many cases, between $1,000 and $2,000 a month. So if cash flow is a problem, mission accomplished right there.
And I imagine at a much lower interest rate.
Sometimes, yes, than credit cards for sure. Sometimes lower than their existing mortgage, sometimes not. But you're absolutely right, much lower than the 25 or 28% that they're paying on credit cards, 6% on student loans. It could be a wide variety of interest rates.
So when a person goes at that, do they just come to the market and they tell you exactly what they're doing, or are they basically just looking for a home refinance?
Yeah, most of them don't know that that's the best for them. They'll come to me normally and say, I'm having a cash flow issue. I need to free up some cash flow. I'm thinking I need to make my mortgage payment go down. I need a refinance. And when I look at what debt they have and I realize that there's a lot of other debt that we should be trying to get rid of before anything else, that's when it turns into that conversation of this is really an equity type situation. People are drowning in debt, can't buy a burger without whipping out the credit card, but they're sitting sometimes on $200,000 in their house.
Yeah, it's great use.
So
as long as they don't repeat that behavior and get back in debt with, I think they're in great shape.
And I talk a lot about that with them. I think that's one of the things that makes me different about this whole thing is because I figured this out through my own trial and error for my own family, sending my own son to college. Sure. This is how I figured it out. And so I don't just give them the loan and say, thank you very much, have a nice day. I put it in paper in front of them and show, this is what you could do now. Like, let me show you the next step. It's not really my deal anymore. My job is done, but I just love it and I want to share it with people. And so I really map out, what they could accomplish.
So they may or may not be lowering their interest rate on their home loan, but they're certainly lowering their
Sure.
rate on the other bills. And so they love that strategy of freeing up some cash, having it all rolled into one deal.
Well, for instance,
you can start with a fresh start.
It's exactly that. And for instance, if you look at somebody with a $1,500 a month mortgage and $1,500 in other debt, that's $3,000 a month. They're already used to paying that. So if I give them a new loan to replace all of that and their new payment is $1,500 or $1,600 a month, think about the increased cash flow.
Yeah.
And if they redirect that back to the mortgage and pay it off in 6 or 8 years,
Wow.
they've accomplished that without one more penny out of their pocket than they were already used to.
That's awesome.
That's the part they love.
Yeah, and they end up with the real dream of real homeownership.
Exactly. I tell people I give them back their biggest asset, which is their paycheck. Most of us never see our paycheck.
Very nice.
So
tell us, how do people learn more about this mortgage and from you and learn how to?
Well, they can certainly reach out to me by phone, email, text, whatever. But I've also written a book on this subject because I felt like it was so important. It's available on Amazon, and the name of it is The Road to Homeownership and Financial Freedom. And the reason I say road instead of roads is because a lot of people think they have to choose between owning a home or paying off everything else and being financially free. And I'm really showing them a way that they could do both at the same time.
Fantastic. Wow, you're a marketer deluxe, I'll tell you, writing your own book. Speaking of marketing, so tell me how you broke into the business and the type of things you've done to be so successful in the mortgage business.
Sure.
It's obviously extremely competitive.
It is. And a lot of times in any industry, when there's a lot of money to be made, there's a huge influx of people that think it's the next get-rich-quick scheme, And then over time, we kind of weed those people out. And the ones like myself that have been in for 16 or 17 years, we've seen a lot of changes. But I got in it the old-fashioned way. I was doing a refinance myself. The loan officer saw something in me. She said, you have the potential to do this. Wow. And I had never considered it, but I was looking for something at that time. So long story short, I was able to get in with somebody kind of coaching me, which was very nice. Yeah. Networking was just a huge part of getting started, as it is, I think, with any business.
Sure.
And I didn't understand networking at the beginning at all. Like you'd go into a room with 100 people and everybody's passing out cards, and then they
typically trying to sell something
go about their business, and you never hear from them again. Yeah. It's such a waste of time, But when you learn that networking is really about building relationships, that's when it makes sense.
That's right.
And that's what I've learned over the years.
So you've been in networking action for about 2.5 years. How's it worked for you?
It's working well. I mean, there's two different benefits, I think, to networking. One is obviously you're trying to build your business. But the other side of that is you're meeting other people that are high quality and very dependable in their industries. Right. And so when I have an issue and I don't know who to call, I know who to call, I'm not searching the internet for some stranger to come fix something at my house.
And that becomes important because I know in the mortgage business, you've really developed a relationship with your customers because you started seeing every dirty piece of laundry in in their laundry basket,
Correct.
but having to go through their finances. And so
Correct.
you really become a trusted confidant. So
I am. And it's amazing how many times I get calls from my clients that just are saying, hey, I need this or that or the other. Do you know anybody? Because they know that I have a really good, solid core of people that I work with.
Yeah. Our background checks where we make every member take one, that always gives me more comfort
Sure.
that I know that I can refer somebody.
Yes.
Well, listen, I appreciate you making the trek down the freeway today.
I
Thanks so
appreciate
much
you.
for joining us, and we hope to see you soon again.
Thank you so much.
Thanks.
Thanks.